The bear case remains strong for GME. Justin, let's go into the option data.
Gotcha. Let me show you on this, Josh. So right here, we've got about 500,000 of negative delta coming through today. And so what this basically means is that you've got notionally from the calls that were bought, from the puts that were bought and sold on both directions, this is the net effect. And if you look through the entire day right here, you notice how there's been an ever increasing downward pressure. The reason this is important is that many people are probably already familiar with the concept of a gamma ramp, where you basically have the option chain that creates a self-fulfilling feedback mechanism that sends the price up and up and up. If you are bullish on GME, obviously you very much want this to be the case, but generally what holds true one way also holds true the other way. And so this is the downside. And so I think of this as a gamma slide, although this is, I guess, probably more accurately say a gamma ramp to the downside, but whatever, right? The reason I mention all of this is that, again, as PyFi noted last week, and it's been continuing on, puts continue to accumulate on GME. Now, whether or not the puts fold or whether they continue on, that remains to be seen. We've got some economic data coming out later this week, and we'll see what happens with the market at large. But the point that I want to reiterate here is that people with big money are making big bets that GME will go down. Now, my personal belief is that they want GME to go down as low as they can get it to go down without getting beneath, I think it was a Vega neutral. But at the same time, they don't want to do it in a way that spikes IV. So that means, again, a huge hat tip to PyFi for helping an idiot like me understand all this stuff. But the point is that I would expect to see a slow, steady decrease in GME to probably for the next 2 weeks. As far as what I would do for a trade for myself, I do have puts right now on GME to, as I believe this will happen, and how long I keep those puts open, or if I decide to close them early at a loss, we'll see where that goes. But that's kind of my take on that. But the real thing, and this is why I think it's important to kind of keep this in mind, is there's two reasons. The first one is that be psychologically prepared for it to happen. Be psychologically prepared for GME to go back underneath $100. Just brace yourself mentally for it. But the second thing is that regardless of however you want to play this, if GME goes beneath 100, beneath 90, beneath 80, or whatever, right, see it as a gift from God. This is the gift that just keeps on giving. Because however you want to play, if you want to buy options, if you want to buy shares, whatever, it doesn't matter. The point is you can go in and you can actually get, if you think this will play out, you will be much better positioned to either get more shares for cheaper, or you'll be able to pick up better options at better prices. Again, assuming this, matches up to what you believe will happen. And just to be clear, Josh and I, we were saying this last week that, you would see a slide down, and we saw quite the opposite. So just to, to our own track record, last week, the word for that, Josh, you and I were wrong right there.
Before we start calling us shills, we are just technically positioning for what we think we're going to happen. We got called shills for saying that we are extremely short-term bearish on GME. We're talking about 2 weeks, and when I tell you I'm this is the most bullish I've been on a cycle since I've really started in the GME space, mainly just because I think we have the most data to support that. Like the more and more data coming in, the more support and evidence that we have that there will be another cycle run, and we are technically positioning to maximize profits for that run. I don't know why people are so scared of playing these cycles like it's a bad dream or something. I truly don't understand. All right, before we start calling us shills, what we are going to do is show you how you can play these cycles and make MOAS-style amounts of money if you continue to play these cycles successfully a few times. Personally, I am not positioning myself now because we are tactically bearish going into the next few weeks. Therefore, we think there will be a better buying opportunity for this June upcoming cycle. Here's what I'm going to do. I'm probably going to start by buying my position within the October 300 calls, and we'll go over the actual calculation. Let's say I buy 15 of them at the current price. Let's say it's $5.80 if I'm buying the $300 strike, and every single cycle we go up about $100 to $200. So let's say the stock price is between 150 and 400. At the high end, of course, you're going to make a ton of money. But let's just say we're at the low end where we got the last cycle, where we go to, let's say by mid-July, we're going at 200. And just looking at it right here, if you'll make about 250%, which is okay. I mean, fantastic for most people. But where do you actually make the money? And that's going to be through implied of volatility. What we will see is because if these cycles are happening, if they go up at such extreme rates, it's not just it's not a slow going up by $100. It is a humongously just massive jump of $100 in a mere few days. Therefore, the implied volatility skyrockets on these stocks. And if you can capture the IV spike, you'll be making much more closer to like a 900 to multiple thousands of percent gains. And that's only if we go to 200. Let's say we see a big cycle this time and it goes to 2000. I mean, you are real. I mean, like 300. Like you are making astronomical type gains that you really can't do anywhere else on any other stock, because the implied volatility on GME goes up so much, because during these cycles the stock runs from so little to so much in such a short amount of time. We see that these short hedge funds and market makers are making so much money through these cycles through going long volatility. Why are we not trying to replicate that? And what will that do inevitably if we do have a bunch of retail apes learning how to play these cycles? These cycles are going to get bigger and bigger. And when I tell you, you will be making more money than you ever seen. And let's say you do hit it perfectly and you get the and you capture the full IV gain. And let's just say we go to 200, and let's just say you make a 900% return. If you threw in, I don't know, what is this? 8.7 grand, and you get let's just call it an even thousand. You're walking with $80,000. What happens if you do that again the next cycle? I mean, you already are capturing Moa style events. Then what if you can do that to the cycle after that and the cycle after that? You would never want this to end, because if you had a stock that you can fairly accurately predict $100 price move every single quarter, would you ever want that to end? I mean, it is a bizarre to think that anything otherwise.
Basically, if you can get an edge on volatility, especially if the volatility is predetermined to occur, or you think that you can determine the volatility occurring in a predetermined set of time, it's probably good. Josh, a few little caveats too. Like, you're targeting October, I probably will be targeting January. And the reason for that is, with XRT off the threshold list, with whatever shenanigans these people can pull, like, I expect nonsense to happen. Recall what happened in February of this year.
Yeah,
everything lined up.
I'm not surprised in the slightest bit, because XRT is now off the threshold risk that they can push some of these obligations over. For how long? I don't know. That's why I'm going out to October, because we don't know if they can push these cycles, but we still do see every single quarter that they have to push these obligations. They've done it 6 times, let's say. I'm just going to place a bet that it's going to happen for the 7th. If it happens 6 times in a row, I'm just going to place a bet that's happened the 7th. I don't know if it will, but all the data we can see that it most likely will. One last final note that we are going to talk about is IV and time decay. So IV, and when we are capturing this IV gain, you have to be pretty active. It is hard to do if you are stuck at work all day, because these IV bumps happen at such a short amount of time. When we see, let's say, 100, 200% spike in IV, that's only happening for mere minutes. And if you can capture, it's absolutely fantastic. I think there are prolonged periods of this IV spike, especially with GME, just because of the rate at which it's running, but you still have to be very actively trading this, and you want to have a few options, just because I've done this many times. You buy 1 or 2 options on a stock, and then it's very difficult to sell out, because you're still bullish and you want to capture the full potential, but you want to take some gains off the table as well. So what do? Sometimes you hold it and then you lose all your profits, and that's happened to me countless times, and I never want it to happen again. So I usually just suck it up and I buy a few of them, even though it is a little more costly. So the last thing that we really have to hammer down on is this data decay. You do not want to be playing these cycles with weeklies. I mean, you see, that's what everyone gambles into, but while they may be the cheapest, they are by far the most risky, and it is much more prudent to pay for the time, because you will never ever regret buying time. You're never saying, oh man, I wish I just bought a weekly because I would have captured way more profits. The only times you're saying that is you're always like, oh shit, I should have just fucking paid the extra premium and bought a few extra months out.